Hello everyone, it's Friday, May 1, and today we will take a look at the charts for the euro and the British pound to identify potential market trends. Yesterday, both the euro and the pound gained upside momentum against the US dollar. This rally was driven by a weaker greenback, which plummeted after the Bank of Japan conducted a currency intervention, bringing the US dollar-Japanese yen pair down from 160.72 from 155.56. Additionally, the dollar was weighed down by disappointing US GDP growth data, which showed that the economy expanded at an annualized rate of 2% in the first quarter, falling short of the 2.3% expected by economists. While this figure is an improvement over the paltry 0.5% recorded in the fourth quarter of the last year, it still disappointed analysts and added further pressure on the dollar. What is more, the European Central Bank and the Bank of England decided to keep interest rates steady. Importantly, they both signaled potential tightening as early as this summer. The ECB is expected to consider raising rates in June, which has fueled demand for the euro. As a result, the dollar wrapped up its worst month since June 2025, supported by the ongoing normalization of the situation in the Middle East. Demand for risky assets remains strong. However, rising oil prices are preventing traders from confidently betting on a complete resolution of the conflict in the near term, which limits upside potential for the euro and the pound. Now let's take a look at today's macroeconomic calendar. It includes data on manufacturing activity, consumer credit, the ample money supply measure, and mortgage approvals from the UK. Positive reports could certainly help the British pound extend its bullish momentum against the greenback. There are no significant news releases from the euro area, so market participants are likely to shift their focus to US statistics. The calendar features the US manufacturing PMI, which is expected to rise to 53.1 in April from the previous level of 52.7. This improvement could provide some support for the dollar as the trading week comes to a close. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 1737 would pull the euro back to 1712. A break below this level could result in a drop to 1685 and potentially to 1.1657. There is a sharp shift in developments in the Middle East. At this level, I would recommend going long on a rebound targeting a move of 25-30 pips. Buy entries at 1.1685 and 1712 should be considered on a false breakout. Conversely, if the price breaks through and consolidates above 1737, the euro could rise to 1753, with the potential to reach 1773. At this level, it would be prudent to consider short positions on a rebound, aiming for an intraday correction of 15-20 pips. Going short at 1753 and 1737 would only be relevant after a false breakout. As for the GBP USD pair, a false breakout at 35.96 would generate a buy signal, potentially driving sterling up to 1.3632. A break in consolidation above this level could propel the price to 36.58, with a more distant target at 36.83. At this level, traders are advised to consider short positions on a rebound, anticipating a move of 20-25 pips. Sell entries at 36.58 and 36.32 should be evaluated following a false breakout. In a bearish case scenario, the price falls back below 35.96, the British pound may come under pressure, dipping to 35.72. At this level, it would be prudent to consider long positions on a false breakout. If the price extends losses to 35.49 and even 35.25, these levels would present opportunities to buy the pair on a rebound, targeting a move of 20-25 pips. Good luck to everyone. Have a great weekend.